always preparing to protect our loved ones. Not always for what will
Now we are live on Facebook.
happen, but for what could happen. With a life insurance cover that grows every year, you ensure that whatever comes your way, your loved ones are always protected. Introducing AIA Super Protector, the life insurance that helps you prepare to put your loved ones first. AIA Insurance.
Morning, Masa.
Morning, Sana. How are you?
You pay a peganisa? That ain't a cream bunny song and Nagalabana. Gilana.
Right. Morning.
Ayubon sir.
Ayubon. Bomu Tamil ki diya.
Bomu.
හැම වෙලාවෙම මාරු සල්ලියට ගන්න ඕනේ නෑ මාම. ස්මාර්ට් ෆෝන් එකකට අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි අපිත් ආරක්ෂිතයි.
470යි. අයියෝ මිස් මාරු සල්ලි නැද්ද?
ඒ ෆෝන් එකේ apps 100ක් තිබුණත් වැඩක් නෑ. ලංකා QR කෝඩ් එක සපෝට් කරන UPay app එක නැත්තම්. කීයද බුදුලාලි ගාන?
435යි.
මැසේජ් එකේ.
හරි මත්තා සල්ලියාව.
දෙන්න මිස් සල්ලි.
ආනෝනා.
මම UPay app එකෙන් පේ කරන්න.
හරි මරු.
Morning. සලියාවනේ.
හරි මිස් සල්ලියාව මිස්.
අන්න කෙල්ලෝ.
Bye.
අන්න කෙල්ලෝ.
සානා.
Google Play Store හෝ Apple App Store හරහා UPay app එක නොමිලේ ඩවුන්ලෝඩ් කරගන්න.
Cma qualification and CGMA designation has provided me with the edge to be successful in securing the current position with my employer.
The Cma C-Suite program helped me bridge the gap between my existing knowledge with the latest trends in business and finance.
The CGMA designation had opened career doors for me. I got an opportunity thanks to the skills I learned from C-Suite program.
Through the Cma C-Suite program, I learned how to be more strategic in my thinking at work. This has given me more confidence when making high-level decisions.
The Cma C-Suite program shaped my critical thinking skills.
What makes a nation great? Is it the richness of its heritage, the beauty of its natural bounty, the state of its state-of-the-art, or is it the bonds that bind us? For decades, SLT Mobitel has been linking Sri Lankan lives and uniting the nation. Whatever the future may look like, we'll always be right here, connecting you to the things you care most about. SLT Mobitel, the connection.
We are Lions. We bring hope where it's needed. Support causes that matter. Change lives. Change communities. Change the world. Visit lionsclubs.org to learn more.
Good evening, each and everyone, and I warmly welcome each and every one of you to Money Matters 1.2 Personal Credit, the Good, Bad, and Ugly, organized by the Lions Club of Colombo host 306A1. And this is the third episode of Money Matters Financial Inclusion and Literacy Capacity Development Program. So let me give you a little bit of a background about the Lions International. So Lions Clubs International, established in 1917, is the largest service club organization in the world with more than 1.4 million members, over 48,000 clubs, and serving more than 200 countries and geographic areas around the globe. Lions has strengthened the local communities through the hands-on service and humanitarian projects. And us, the Lions Club of Colombo host, we are the pioneers of Lionism in the country, where we have been the beacon of service for over 62 years. Over the years, the Lions Club of Colombo host has organized many projects to support the local communities. And our latest project being the Money Matters Financial Inclusion and Literacy Program. So let me give you a very quick background about what this Money Matters program, or rather series, is about. So Money Matters is a one-year-long capacity development program to optimize the financial literacy of the Sri Lankans. And the phase 1 would include 8 online series of panel discussions, and you are listening to one of them, with the participation of multiple stakeholders such as regulators, Sri Lankan banking and insurance market participants, international financial institutions, and non-governmental organizations and think tanks. And the phase 2, it's a 6 months long outreach capacity development program for 50 selected low-income families to equip them with required financial literacy capability. This will be followed by similar outreach programs in various parts of the country. And also, I must thank the sponsors for this event, because without the sponsors, this event wouldn't have been a success, or rather a real. So PR Wire, the strategic communication partner, and CMA Sri Lanka as a knowledge partner, and AIA Sri Lanka, AIA Insurance as our insurance partner, SDB Bank as our banking partner, and finally the SLT Mobitel as our telecommunication partner. So let me set a few ground rules before I commence the session. So throughout the session, you will be muted. And also, if you do have any colleagues who could not join in for the Zoom session, please request them to join via Facebook Live session. And also, I'm sure you will be having more than enough questions to be thrown at this eminent panel of speakers. So you can use we have dedicated line. It's tagged as Q&A. So all your questions can be routed through this Q&A line. And also, we have a couple of disclaimers about this program. So the ideas, the views expressed by the speakers may not necessarily reflect the official policy of the or the position of any other organization, employer, or any of the business entity that they represent. And all participants of the Money Matters seminar series should not be or not refrain from acting on the basis of the seminar content without first seeking appropriate independent professional advice with respect to circumstances specific to each participant. Lions Club of Colombo host shall not be liable for any losses, damage suffered by any participants on account of any participant taking action, refrain from taking action based on the seminar content. And also, based on our club information security practices, Lions Club of Colombo host, we shall not share or sell any of your private details, personal details such as email address, mobile numbers to any of the third party, or it will not be used for any of the commercial activities. And last disclaimer being, the Lions Club of Colombo host select each speaker panel for the Money Matters seminar series at its exclusive discretion solely based on their expertise, suitability, and availability of the potential speakers, and we do not discriminate based on the race, religion, sex, gender, or sexual orientation. And if you need to, the comprehensive disclaimer is available on the chat box, which will be shared in a couple of minutes. So you can refer that for the complete disclaimer, the official disclaimer of the program and the club. And with that, let me quickly introduce the panel of speakers who are the most wanted set of people for today. So let me start off with Mr. J.P.R. Karunaratne, who's presently the Assistant Governor, the Central Bank of Sri Lanka. So Mr. Karunaratne possesses more than 30 years of experience in the banking sector, and at present, Assistant Governor in charge of the Department of Supervision of Non-Bank Financial Institutions, Regional Development Department, Legal and Compliance Department, Department of Foreign Exchange and Security Services Department. And also, Mr. Karunaratne holds a Master's of Commerce degree with specialization in finance from University of New South Wales in Sydney, and a postgraduate diploma in applied statistics and Bachelor of Science, Physical Science degree from University of Colombo. And let me get to the second speaker, Mr. Nandi Anthony, who is the Director General Manager of the Credit Information Bureau of Sri Lanka, which is known as CRIB. Mr. Anthony has a career spanning over more than 25 years in the financial sector, with a proven track record of extensive senior management experience at a leading foreign commercial bank, investment and merchant banks, and as a head of finance in leading stockbroking and investment management house in the country. Mr. Anthony is a fellow of the Chartered Institute of Management Accountants, and also he holds an MBA from University of Sri Jayawardhanapura, and also he holds ACI certificate financial markets dealer and licensed stockbroker. And our third speaker is Mr. Rohana Kumara. Presently, he is a Deputy General Manager responsible for recovery provinces, business revival, and rehabilitation of the largest private sector bank, Bank of Ceylon. Mr. Rohan Kumara was appointed as the Deputy General Manager in January 2021. Before this appointment, he has held the positions of Assistant General Manager, Branch Credit, Assistant General Manager, Project Finance, and Assistant General Manager, Recovery and Provinces. And also, he's been appointed as an AGM in 2018. And Mr. Rohan Kumara is a graduate of University of Kelaniya with a Bachelor of Science first class degree. And also he holds an diploma in banking and finance from IBSL, and also an executive diploma in leadership from North Illinois University of USA. And our fourth speaker, Mr. Nadisha Senaratne, who's a country head of wealth and personal banking, one of the world largest global financial institutions, HSBC Sri Lanka. And Mr. Senaratne counts more than 27 years of experience in the field of banking and finance, instrumental in commercializing credit cards and consumer loans in Sri Lanka. And prior to this appointment, he served as a senior regional manager, credit cards and loans in Hong Kong. And also he was head of cards in Malaysia before taking over as a country head of wealth and personal banking. And also, Mr. Senaratne served for both HSBC and Nation Trust Bank, Sri Lanka. And Mr. Senaratne holds a Bachelor's of Science degree in Banking and Financial Support Services from the London Institute of Banking and Finance. And also, he holds an MBA from the Edith Cowan University. And also, he's an associate of the Chartered Institute of Bankers, London. And finally, it's me. I'm Asitha Pinnaduwa, the moderator for today's session, and I'm the president of Lions Club of Colombo Host for 2021 and 22. And presently, I'm serving as assistant vice president at Nation Trust Bank, counting more than 20 years of experience in the market. Right. So that's a quick introduction about the panelist. And with that, let me quickly move on to the open remarks or give you a high-level introduction about the program. And before that, we have a exciting item. So before that, we will be asking a question from the audience. Can we have the question? So you can vote through your system, through the Zoom platform. Can we have the question coming up? Yeah, we will spend about 15 seconds. You can pick any of the answers and we will give you the answer at the end of the session. Yeah, I think we are good. So we got so many answers. Right, thank you very much. So let's move on. Right. Yeah, so I will give a bit of a background. So 79% of our participants believe the A is a correct answer, meaning borrow from a licensed commercial bank at the rate of 5% per annum, and 4% believe we can borrow at the rate of 7% from a registered finance company, and 11%, interestingly, 11% of our audience believe that they could borrow from a local money lender at the rate of 3% per month. That's different. That's a catch. That's not 3% per annum. That's 3% per month. And interestingly, 7% of the audience believe that none of these four options are conducive for them. So they have refused to they pick the answer number E, and none of them believe that they should borrow from the neighbors. Interesting. Thank you very much. Right. So let me give you a bit of a background. So Sri Lanka is a middle income country with a GDP per capita of USD roughly 3,800 rupees or dollars, bigger pardon. And with a total population of 21.9 million and per capita income of in Sri Lankan terms, roughly about 683,000 rupees as per the central bank. So amid the COVID-19 pandemic, the Sri Lankan economy contracted by negative 3.6% in 2020, the worst growth performance on record, as is the case in many countries fighting with the pandemic. Sri Lanka's first quarter 2020 GDP growth was roughly about 4.3, while the inflation stands at 6.8, while the benchmark 1-year government treasury bill yielding at about 5.8%, and the interim, the unemployment ticking as high as 5.5. So the question is, as individuals, citizens, why we should pay attention to our personal finance. In personal finance, the access to credit plays a critical role. So why do people borrow? Why citizens, they borrow money, be it from financial institution, be it from individuals? So there are many reasons why people borrow money. Some are for good reasons and some are definitely not. So if you look at these reasons, some could be to make a purchase. So it could be we borrow money because we want to buy something. It may be large as a property or a car, or sometimes a smaller like a furniture or a computer. Or sometimes it could be because of the experience, because we may need to borrow money to spend on experience. It may be something as large as loan to travel the world, or it can be something smaller like using a credit card for a dinner out. And also, it also could be to consolidate other loans. We may have borrowed money to pay off other accounts or loans we have. We consolidate other small debts into one large loan, which gives us just one monthly payment. But this can be a sign of a large issue, such as being overextended financially and borrowing too much. So as individuals, it's important that we understand the purpose of borrowing. Anyway, we are not alone. The lending system was originated in ancient Greece, in Rome, almost 3,000 years ago, and one of the oldest methods of lending was followed by the pawnbrokers. So, ladies and gentlemen, to understand how consumer credit, if not the personal credit and debt, impact our personal finances and why it should be managed, I would like to begin the Money Matters 1.2, personal credit, the good, bad, and ugly. So with that introduction, I would like to move on to the most important session, the panel discussion. So I would like to ask the first question. If you've been a follower of Money Matters, you'd have noticed that we generally start off with the regulator. So Mr. Karunaratne, it's nice to have you here. So the first question, what I would like to ask from you is, what is consumer credit? And what is the role of a regulator, particularly you represent the Central Bank of Sri Lanka, in respect of the financial institution, and why is the growth of consumer credit important to the Sri Lankan economy as a whole?
Okay, thank you, Asita. Let me first of all express my sincere gratitude to Asita and the Lions Club for inviting me to be part of panel discussion organized today on this important topic of personal finance. And very good evening to all of you. So let me directly move on to the question what Asita asked. So what is the role of regulator in the case of Central Bank of Sri Lanka, and also the importance of consumer credit for economic growth and related factors. So as you know, not only in Sri Lanka, all over the world, central bank is considered to be the apex institution in the financial system, and which is legally entrusted with the responsibility of mainly securing an efficient monetary, financial, and payment and settlement system, which is very vital to facilitate economic activities. So while ensuring that financial institutions and the financial systems are resilient to shocks and fit to function smoothly, Central Bank of Sri Lanka, like many other central banks, facilitate and guide the financial institution to cater the financial needs of the public in an efficient manner. So as most of you know, in terms of Monroe Act, Central Bank is entrusted with two core objectives: price stability and financial system stability. So basically, the regulatory aspect comes within the second component, financial system stability. So if you look at from broader context, the regulatory requirements are designed not only to protect financial instruments, but also to protect interest of customers and depositors. So if you look at many recent events such as moratoriums, which facilitated through central bank, itself is part of this interest of customers, right? So if you go to the financial system objectives, there are two things which I can capture. One is the oversight of the financial system, so which is part of the mandate, where central bank undertakes surveillance of licensed banks and other NBFIs coming under its purview, so that there won't be any disturbance to the real economy, and there won't be any systemic risk which ultimately lead to financial or economic crisis, which we have seen different areas in the different parts of the world. The secondly, macroprudential regulation, now which address systemic component, basically systemic risk component, whereas there is another element which is called microprudential regulation, which addresses individual or individual entities or group wide risk. So let me move on to the second part. The first part is oversight, that is a broad aspect. And second part, the micro part of it, the licensing, regulating and supervision of banks and the selected non-bank financial institutions which are coming under the purview of the central bank mandate. So as I said, the objective is to promote the soundness and safeguard the interest of depositors, investors and other stakeholders. So the regulation and supervision of central bank, like many other banks, central banks in the world, basically follows, especially in the case of banks, some internationally accepted standards. Now, when it comes to accounting, as we know, we follow international financial reporting standards. When it comes to certain other regulatory aspects like capital adequacy and supervision, we follow regulations imposed by BIS, Bank for International Settlement, basically through Bank's Basel Committee on Bank Supervision. So these regulations take the form of directives starting from licensing process, then supervision and regulation of different risk components like credit, operational, market, and also maintaining adequate capital and liquidity, so that relevant banks or NBFIs, especially the licensed finance companies, have adequate, comfortable resources to maintain or manage risk, and also the resolution of weak financial institution coming under the central bank purview, right? So now, if I move on to the consumer credit part, okay. Before that, let me explain few other functions. Now, in line with that protection framework, now central bank also maintain a deposit insurance protection fund, deposit protection fund, which is called Sri Lanka Deposit Insurance Liquidity Support Scheme. Okay. So let me move on to the part of consumer credit. Now, I think the rest of the panel speakers, I think there is DGM from Bank of Ceylon, Mr. Rohan Kumar, could definitely explain in detail, because they are the people who ultimately, lend to these, consumer finance needs of the people. Now, again, an important element of any economy. Consumers' ability to borrow money easily allows a well-managed economy to function more efficiently and stimulate economic growth. So, like other credit, now usually when you say consumer credit, there's a little bit scarce among regulators as well as the lenders. Generally assume a little bit high risk because most of lending may not be adequately covered through collaterals. So, but it plays an important role in economic growth. So it allows people to purchase goods and services immediately and repay cost over time. So the consumer credit, one important element is consumers' flexibility in spending, which end up with a lot of perks as well as rewards, provided the credit is used in an appropriate way. Okay. But sometimes we have seen that, people tend to spend beyond their means, not for acceptable purposes or acceptable ways. The other element of consumer credit is demand for consumer credit create innovations, and entrepreneurship again ultimately accelerate the economic growth. But while there are positive factors, the negative factor, imperfect information could result in non-performing loans, which could lead up to the build-up of stresses in the economy as a result of debt build-up, which we have discussed, many occasions in the past in certain areas of economy. Now, let me bring some, findings from a, research done on this area to substantiate what I said. Now, this gentleman, Andrew B. Luckman, where he presented the paper at Oregon State University in May 2015, the topic, the relationship between consumer lending and economic growth. So I will straight away, tell the facts reported in the research paper as it is. The consumer credit allows to purchase beyond their cash incomes, and consumer spending is a component of GDP. More spending directly leads to an increase in GDP. These are the findings. So this is extremely important in modern industrial economies. Now, he has basically studies not related to our countries, but this has been the experience, like USA, UK consumer spending. At that time, as per the World Data Bank, that is 2015, comprised of 2/3 of total GDP. And similar trends can be observed in India, and Australia, and Japan. Okay. So another potential reason for a relationship could be that consumer lending is self-perpetuating. As consumers borrow and they spend more money, so this in turn boosts GDP. As GDP rises, companies increase their output in expectation of greater demand. So once again, GDP is boosted and banks begin to lend more in expectation of further economic growth. So this cycle continues as consumers borrow more money. So the continuous cycle could explain changes to consumer lending cascading through the economy and affecting economic growth, right? So these are some findings he made of the importance of consumer credit. But now, while there's a potential for large expansion in consumer lending, again, the downside risk is the possible increase in defaults. Especially when credit grows faster than real incomes. Okay. The resulting defaults would, very harmful to individual institutions and may lead to problems in the financial system, ultimately resulting GDP per capita contraction, right?
Yeah, I think Deputy Governor, I think Assistant Governor, you made some very valid points. So that actually will help us to get to the next critically important question. So I think you repeatedly actually mentioned a couple of valid points. So the consumer credit will definitely help the GDP to improve. And by doing that, that will help the businesses to, increase their businesses and the business capacities as well. So thereby the overall economy will grow. I would like to take this question to Mr. Rohana Kumara. So despite the statement made by the Assistant Governor, Mr. Karunaratne, I think the one frequent complaint or rather feedback what we hear from the general public, especially in the subcontinent, especially this part of the world in Sri Lanka, they believe that this consumer credit, it's only for the richest or any sort of an individual who can provide a collateral. So is that correct? Is that statement is correct? Is there any factual? Is that correct? Would you like to comment on that?
Yes. Good evening, everyone. First of all, let me thanks the Lions Club of Colombo 306A1 and the moderator today, Lion Asita, for inviting me to this worthy course and share my experience with you and among these eminent panelists. So quickly, I'm coming to your question, Asita. Yeah, up to some extent, I agree with you. So let me explain. Yeah, suppose that a person comes to you and he's asking, say, 100,000 rupees, and he promised to pay back that money, let's say, after 3 years' time. So are you in a position to give that money to that person, maybe a person? I don't think that you don't agree with that. What if that he is asking, is promising to pay within 2 years? Still you don't agree. So what if he is promising to pay back within 1 month? Sometimes you may agree. But anyway, so definitely you have to concern about a lot of things. What are the things that are coming into your mind? Normally, you need to know the wealth of this person, not only the wealth, but also the health as well. What is his income level? Whether he is having a definite source of income, whether he is earning a sufficient income to pay that money. So what happens if he, say, dies in between prior to settle that money, or if he go missing, what will happen? So if you go abroad, so what are the recourses that you are having to recover this money? So a lot of questions are there. Similarly, banks also having the same set of questions actually, right? So the banks are also business organization. At the end of the day, so banks are actually responsible for the to keep the interest and the rights of these stakeholders, especially the depositors. You know that banks simply cannot print money and distribute among borrowers. Normally, so banks are lending money on the depositors' money. It's no time, of course, so the banks should pay their money with the interest. So they cannot ask the depositors to wait until these borrowers pay their loans. So that's why the banks are a bit concerned about these things actually. That's why they are evaluating your proposals deeply, right? So based on the evaluation finding, of course, they will take a decision. So if you're having a strong case, actually, if you're having a good track record, if you have settled your dues in the past in prominent manner, and if your credit score is very good, the risk is low, right? So in that scenario, of course, banks are very happy to lend, but at the same time, you know that almost all these borrowers that they are not paying their debts actually. At the end of the day, so almost all banks are having NPS. So up to some level, of course, banks can bear, but beyond that limit, of course, the banks cannot bear, right? So that's why they do evaluate. And if your case is actually a bit weak, if your fast records are not good, or if you are seeking the facility for a longer tenure, say for 10 years or 12 years, then of course, there is an uncertainty. So that's in that scenario, of course, the banks, they request some collateral. But anyway, so my advice is actually, so you have to be with back. I'm quite happy that most of the viewers that they have, they are actually like to obtain facilities from commercial, so financial institution, registered financial institutions. So if you go to a personal money lender, of course, the pressure is very much. So you have to be with banks. If your case is, as I said, strong, of course, you can still negotiate for better options, so better terms. If your case is strong, actually banks, they do not put on some, what do you call this, rigorous terms and conditions. So still you can negotiate for lower interest, longer tenor, so grace period. Actually, it depends on your position and actually the requirement. That's it, Asita.
Thank you, Rohana. So you gave a very comprehensive answer. So just to summarize for the benefit of the audience, I think as far as I gathered your question. So what we need to understand is, yes, I mean, any citizen may have the intent to borrow. It's just that as citizens, what we need to understand is even the financial institutions, rather banks or the financial institution, are also profit-making entities, and management, they have the responsibility to deliver the shareholder value for the money that they have invested. And on other terms, what will happen is, so the money that the banks are lending is not their own capital, because if you look at the capital, the portion of capital is relatively low. So most of the money, I would say about 90% of the money lent to the borrowers are the money borrowed from the depositors. So the banks have the responsibility to safeguard the interest of the depositors, so that as a result, so the bank got to be extra vigilant on to whom that they're lending, because as Mr. Rohana correctly said, yes, taking a loan is relatively easy, but how this person can manage his cash flow in a prudent way is a $1 million question. Yeah. So thank you very much, Rohana, for setting the tone. So with that, I would like to move to Nadisha. Nadisha, you carry, you manage a $1 billion portfolio in different markets under different financial instruments as well. So how would you compare since we were discussing about the lending policy and whom that Sri Lankan banks are lending? So in your view, how do you compare the lending policies and practices and the client segmentation based on the types of clients that they lend against a local financial institution in global and regional context?
Yeah, thanks. First, let me congratulate the Lions Club of Colombo host and yourself for launching this Money Matters series. I believe it's a good platform to increase awareness and education within the community that we serve. So, getting back to the question that you asked, look, if you really stay on the consumer lending and the retail borrowing, as you rightly said, the first three questions to set the scene, it's like who, why, what, right? I mean, if you ask who are we targeting, it has to be in any market. If you look at it, it's an economically active population, and within that economically active population, you have segments in every market. You may have a lower mass and an upper mass, maybe an emerging affluent segment and affluent segment. And obviously, it's quite easy because of your credit scores are higher, and also the borrowing needs are relatively lower within the affluent segments, and then clearly where there's a demand or the cash flow gaps are largely exist within more the masses and also more the emerging affluent kind of segment. So it's very important to understand who are your target segments and who are we targeting. The next question is why why they want to borrow money, right? And obviously credit cards also another piece that comes in, and a lot of questions are around is why the credit cards penetration is relatively low in most of the markets. But couple of reasons here is there's one part of that is the borrowing side, the other part is the payment side. So we need to really understand what is that they are looking for, right? I'm on a credit card is not just borrowing, it also creates a payment platform. But if you stay around the borrowing side, if you go to the what what are the options you have, right? If you look at borrowing, I think the poll that we had also gave a little bit of context. You have formal platforms and informal platforms. And then the formal platform, I mean, whether it's a secured borrowing or unsecured borrowing. If you're secured borrowing, you have lots of options. I mean, if it's a mortgage, obviously you have a property as a security, and that you can borrow large amounts for a longer tenor. And obviously it could be a vehicle loan. Once again, you have you have a collateral. It could be people also consumers have access to hire purchases or a leases, right? So that's the other operating lease kind of thing is another option for you to borrow for your working capital or your consumption needs. The other things that are typical are like, you can borrow a personal loan, or you can also pawning in Sri Lanka. It's also relatively large. And then obviously people can choose to borrow from a credit card if they choose so. And having said that, obviously the money lending, the informal sector also quite large in emerging markets like or developing markets like our country. So the key thing is in terms of developing that among banks looking at, I think as Mr. Karuratna said, it's important. The infrastructure readiness is one of the key things. I think one of the big thing is having a credit bureau. I think we know that Sri Lanka. I will leave Nandi to talk about it, but we in Asia we have one of the best platforms, and that's good for both consumer as well as the financial institutions to really understand the total debt of a consumer. And also from a consumer standpoint, it's important that the consumers and the public have a good credit score and a good track record, right? So that's one thing, is having that platform. I think Sri Lanka went into this many decades ago, but most of the other markets have been lagging behind. Number two is obviously also accessible to data transparency. I mean, obviously, as Mr. Rohanakumar mentioned, I mean, you need to ensure that the source of income can be validated easily. The employment and KYC, the customer due diligence can be properly done. How easy or difficult to do that in your market, right? And you need to make sure that you give, when you're lending, you give it to a real person and not a fictitious applications, and all there could be potential application fraud, etc. So how do you really identify the customer identity, and then you pass all the affordability test and the repayment capabilities or repayment capacity. Yeah, so the third piece also is also the pricing. I mean, what are the other factors that we should look at in terms of setting pricing and the funding cost? If you look at markets like us, obviously when you give a double-digit kind of on your deposits, not now, historically, obviously lending has to be high. And if you get a loan at about 13-14%, clearly, the repayment cost of the debt is also expensive. So compared to some of the other markets where your interest rates are relatively low, and then compared to markets like ours, that's also another disparity that you have. So to put some context in terms of household debt, right? And if you look at household debt in different markets in the world, something interesting that comes out would be if you look at very developed markets, say UK, USA, their household debts are relatively high. It could be even high as like 90% as a part of GDP. If you look at the markets like Singapore, it could be around in the range of like 50%, 60%. One exception is Malaysia. They went up to about 70%, but that's one of the things that the regulator itself and the banking industry recognize. And they had to build in controls to make sure that they manage the accelerated debt that they really saw in the millennium and the younger segments, because that's clearly an example of overconsumption. Then in markets like India, maybe 37%, and Indonesia about 20%, and Sri Lanka, the household debt to GDP is about 11%. But what is interesting is, has also referred to the point that Mr. Karuratna said before, I mean, what are these borrowing is being invested on? Now, for example, if you take a market like Australia, where GDP borrowing to GDP is about 100%, about 56% of this based on the mortgages. So there is a real return in the and it's also accumulating wealth through borrowing now. And about another 36% is more invested debt. It could be on another second property on to earn rental yields, or it could be on equity, so that you have a regular cash flow or capital gains. And the personal debt is only like low as like 3%, and credit card debt is about 2%. Compared to Sri Lanka, which is like 11%, our mortgage is like only about 31%. And consumer durable about 12%, pawning about 10%. So it's quite large. The borrowing that is taken on consumer durables and the pawning and credit card, if you put together, that's comprised about good 30%. So that goes back to the point is what we need to educate also is what are they borrowing for? So people have to be more responsible for their borrowing, and banks have to be more responsible in lending. So I think if you do that, I think, as you said, we all recognize the need to increase consumer lending, but obviously we also have to create that awareness in the market so that the borrowing is invested properly, and also from a consumer standpoint and from a financial institution standpoint, we also need to make sure that we address some of the infrastructure and the basic improvements through using digital technologies so that it can make it more easier and accessible.
Thank you, Nadisha. So I think you covered lots of ground. So since also we were speaking about responsible lending and borrowing, so that actually leads to how we measure this, how we quantify this. So you heard it from Nadisha as well. In Sri Lanka, actually, I think we are the first South Asian nation to introduce a bureau, or rather the Credit Information Bureau. So I'll leave it with Mr. Anthony to comment on that. So the availability of information, so dissemination of information plays a critical role for the financial institution to understand, how and when and what that they borrow. So with that, I would like to take this question back to Mr. Anthony, who's heading the entire operation of Credit Information Bureau. Mr. Anthony, would you like to, touch on, actually, I would like to couple two questions for you, right? So I will, to make it a little bit complicated. First, I don't think, though the CRIB was established long years back, I don't think most of the people do understand the exact role of the CRIB and what sort of a contribution that it makes. So that's my first question. So the second question, what I would like to understand is, still, if you look at Sri Lankan as a community, as a country, still we have this taboo surrounding the CRIB report among the general public, because some of them, they believe that only the willful loan defaulters get reported to the CRIB. So as long as you pay your debt, it will not be reported to the CRIB. Right. So would you like to shed some light about this whole dark cloud? Sandri, over to you. Mr. Sandri, if you could unmute yourself. Yeah, that's okay.
You can hear me now, Asita?
Yes, you're audible.
Right. Okay. So first of all, hello to everyone, and thank you, big thank you to the Lions for organizing this. I believe it's a very good forum to sort of educate people and give a lot of awareness on these very important topics that these speakers are covering today. And hello to everyone. So getting back to the question very quickly, what Asita posed. First of all, the purpose and the role of the bureau, it's a very important thing to sort of explain. So there was in the 1980s, the early 80s, there was a financial markets crisis in Sri Lanka. So basically, it happened due to sort of irresponsible, indisciplined lending, and not systematic lending. Due to that, there was a crash, and there was sort of a crisis. So all of the people, the economists at the time, the central bankers at the time, all of them got together and looked at what are the other systems and methodologies that the developed markets adopted to come out of this kind of thing and to ensure that the financial market stability, system stability is maintained. So that is how this CRIB came about. CRIB was actually formed to avoid, situations of this, to ensure that lending is disciplined, systematic, not to create indebtedness amongst people, and to thus, reduce these non-performing loans and the markets crashing, the lending institutions crashing, and the people not being able to take debt and getting into too much of debt, and to avoid that kind of thing is why the crib was brought about. So this is something that people don't understand. Lots of times the people misunderstand the purpose and role of crib. They feel that crib itself is an impediment to credit. But if you really take the purpose that why we are there to propagate credit. We are there to ensure that the lenders, the portfolios are in good health, and then finally the financial system's stability is maintained. So that is why the crib was formed. And actually it is, although sometimes crib comes off as like the not the most popular chap in this whole lending and the borrowing scenario, but actually if you really go to look at it, crib must be there for borrowers to sort of get their borrowing. And if there has ever been a borrowing in Sri Lanka, crib has been behind it, and crib is the silent partner enabling these lenders and borrowers to do their thing, right? So like Nadisha also said, and a couple of speakers also said, Sri Lanka went into this bureau lending, the bureau credit bureau space 30 years ago, in 1990, right? And we are one of the oldest credit bureau in South Asia, if not probably one of the oldest bureaus in the world. So Sri Lanka is like sort of privileged to have that, and this was established to propagate credit. We have to also state here what is our functionality and what is our structure also. So I explained the purpose why the crib was made. So our functionality is we basically you can give it in 3 words: collect, synthesize, and disseminate. So we collect, we process. Synthesize means we process and put it in an orderly manner and give it in the form of, we collect this credit data, process this data in the form of reports, and distribute it to the people who need it, the public or the lenders, because they need to take a look at, they are also not going to blindly lend the depositors money, like Mr. Rohana explained as well. So they have to be responsible, because if these lending institutions get affected, the borrowers will not have a place to borrow from, and then again the regulator is going to be very worried, because financial system stability is going to be upset. So this is the responsibility of the credit bureau to come in here and provide a platform where this responsible lending, so that we don't create indebtedness, etc. So our functionality is once again to collect this credit data and process it in the form of orderly reports and distribute it. So we do that every month. These lending institutions send in this data to us every month, and then we give it back to them in reports so that they can do more lending. That's the normal, that's what crib does. So our structure, who are our shareholders, who are our members, our shareholders are banks, finance companies, and leasing companies who are regulated by central bank. At the moment, these are our member institutions, right? Later on, there is provision in the crib act. We are made out of a crib act, right? So the crib act, through a crib act, we have been made, we are by structure, we are a what you call the statutory body. We are called a statutory body. So we have shareholders. Central bank is a shareholder. Banks are shareholders. State banks, commercial banks, they are all shareholders. Finance companies are shareholders. Leasing companies are shareholders. They are all shareholders. So we function like a company actually. So all of these shareholders are represented on our board, right? Normally, our chairperson, our chairman, is a deputy governor of the central bank, and also the director bank supervision also sits on our board. And then commercial banks, state banks, they are all represented on our board, right? If development banks, the special categories. If all of them are represented, then the finance houses, the finance companies are represented on our board, and then again the leasing companies also represented on our board. So basically, CRIB, that is our structure. Then I mean, typically these credit bureaus are very small teams handling a huge nationwide system, right? So our CRIB is also similar. Along with me, the director general manager, there is only 26 people in CRIB, right? And we handle a huge system, countrywide system, facilitating this whole, giving of credit data so that the lenders can give make an informed lending, so that their lending portfolios are healthy, and also the borrowers are also in good health, and the borrowers also don't get into unnecessary debt, etc. So this is our role, our structure, and our shareholding. So in brief, then getting back to this taboo, what Asita asked about, the next point, which is the all-important story about CRIB actually. So there are a few statements that I would like to address here. One statement we hear is that I'm in the CRIB, Mao CRIB, sometimes they would go as to say Rupial 5000 Mao CRIB, something like that, right? Mama CRIB or something like that. So I would like to explain that, like, everybody is on the CRIB. It's not that, CRIB is not a cabinet of baddies, or CRIB is not like only defaulters are in the CRIB, which is totally wrong. And, there is this myth that CRIB blacklists people. There is no blacklist in CRIB, right? In fact, to find the word blacklist in Sinhala, it took us a long time. It's called asadu lekana gata karna. I think it's a big word, right? So we have no asadu lekana or a blacklist in CRIB, and we responsibly would like to state that to the general public and to everybody that we don't blacklist in CRIB. And CRIB also is just only an information provider to facilitate lending. We are there to facilitate, propagate lending, right? So we never give a decision to the lending institutions, whether it's a bank, finance company, leasing company. We never tell them, don't lend to this person, lend to this person, or give so much only to this person. No, we don't give any decision like that. That credit decision is entirely theirs, right? So you have to understand, when you're a borrower, that transaction has to be with the bank, or the lending, or the finance company, or the leasing company, or whoever the lender is. CRIB has nothing to do with CRIB. You have to be glad that CRIB is there. See, if CRIB was not there, right, there are, I think, altogether about 80 odd institutions, banks, finance companies, leasing companies. You go to any one of these institutions to get a borrowing, right? That person who's going to lend to you first has to call up another 80 odd places to find out, has this person taken a loan from somewhere? How has this person paid up? Or whatever. So, that is why CRIB is there. CRIB, like in an instant, when you type in your ID number, key in your ID number, that lender can get a good idea about how's this person. So, has this person never taken a loan? Even that's possible. Might be first time you're just out of school, going in first job, then you're going to get your loan. Yeah, so then you won't have a credit record. It's a no-hit report. We call it a no-hit report. So, it can be that also. So, either way, whether you have a credit record or not, or you have you have taken a lot of credit and little credit, all that is shown in your credit report. It tells you about yourself, right? So this is why you have to have your credit report in good health. A lot of us get our every 6 months or so, get our cholesterol checks done, and get our blood checks done to see how healthy we are physically. I mean, I would advocate to all public, get your credit report, check it out, and have it in good health. In other countries, they make a huge attempt to keep your credit report, your credit scores in very good health, because that's finally what gets you a loan, and like, you know, it tells a lot about you, right? So so basically this taboo about, you know, crib blacklists people and you're in the crib. There are over 8 million people records in the crib, right? You know, the moment you go and get a loan, the moment you go and get a credit card, any credit product, housing loan, personal loan, any credit product, that particular lending institution who lend to you, at the end of the month, they have to send that information of you taking that credit card or the loan or whatever. They have to send that information to us. So if you are not on the crib only, you should be worried. Right? Mama crib is like a bad statement. Like, you know, it's a wrong statement. You should not. Crib is there to help you. Right? It's your place. Right? And like I said, I advise you to check your credit report out. Right? You don't have to now, you know, with all these lockdowns and everything and curfews and, you know, with this pandemic, people may not be able to get to a bank physically or get to the crib physically, but you can online check you go to www.crib.lk, you know, you get your credit report, right? Yeah. You are able to check your credit report out to see whether the banks or whoever who you have borrowed from have also displayed your data in the correct manner. If it's not come to crib, and you can record a dispute, and we'll help you talk it out with the institution and correct it also.
Yeah.
Right? So
you made some valid point, Mr. Anthony. So I think the most important thing that I gathered was, so if someone says my name is in the crib, that is a good thing. That means you have started your credit journey already. So it's not that, you know, you've been sent to jail or something.
Correct.
Right. So that basically will help the financial institution to assess how prudently that you have managed your credit, and how, you know, how efficiently that you have been able to pay your credit right on time. Right. So thank you very much for that insights, Mr. Anthony. So with that, we would like to stop for a quick commercial break. So we'd like to invite our knowledge partner, CMA, to do a quick session about the offering that they have. Tarindu, over to you.
Thank you very much, Asita, and a very good evening to all of you who's connecting on to the session today. A very interesting session indeed in terms of findings and knowledge that have been shared. So I have been given about 5 minutes, so I'll be very quick in terms of my introduction. Let me start sharing my screen straight away. All right. Cma is basically a household name, and a lot of you have gone through, maybe at an initial stage, you have heard about candidates or Cma members who are currently leading positions in the economy in the country. Now, I just want to start off this way in terms of giving you an understanding of building business and finance teams for the future. Now, let's talk about this. How can we help you achieve resilience and growth? A question that you could ask yourself in terms of what kind of skills that you need in terms of going ahead and moving ahead in the game. So ask yourself, is it the right time for me to invest on developing skills that are relevant? And in doing so, what needs to be done? So I'd just like to quickly take you through what you see onto the right side of the screen in terms of what I believe in deciding what's best for you at the right time. Basically, if you are to pursue a skill, if you are to be certified in a skill arrangement, let's look into these three elements: time it takes, the skills which make it relevant, and the financial commitment, right? And then just to see, do you have access to a learning solution that covers the requirements listed in the screen? Teaches you the skills that are highly recommended by the employers, and that offers you flexible learning, and does it allow you to be agile in your career aspirations, for you to move from here to other segments of the departments across, right? And is this a certification that is recognized by the employers? Forget about having a name to its own, but is it recognized by the employers? Is it giving you a value addition to say, look, you are capable of doing a certain tasks that are assigned to you, having this qualification or certification? So in doing so, how can Cma support? Now, this is the Cma syllabus. Ideally, you have about 16 exams to complete as you complete across 2 to 2.5 years if you are to just complete or start after your advanced level. But here, the audience today are not them. You are working professionals that would rather satisfy the requirements that I listed on the screen. I mean, you could be a C-suite professional with over 50 years of experience. You could be a chartered accountant with over 6 years of experience. And you could be a senior manager, or you could be a middle manager. Or beyond that, if you could be a senior executive or has a business degree or a master's degree with a minimum of 3 years of experience. So I have categorized the audience today into these 5 areas. And I just want to give you some insight, okay? If you are to follow the qualification Cma, if you are to get hold of this business qualification, what needs to be done and how it can be done. Now, what is your entry point to the qualification? If you take the 16 module Cma syllabus structure, you can see there are 3 case studies: operational case study, management case study, and strategic case study. So basically your entry points would be defined into these 3 case studies by assessing your work experience plus the professional or education qualifications that you possess. So 3 entry points for you to complete, and then the top or the best case scenario being the strategic case study, next best being the MCS entry, and the least being the operational case study. Now, who would qualify to get on board to the very top or to start off with the final case study, which is the strategic case study? If you are a C-suite professional, a CEO, a CFO, a director, or a senior manager with over 5 years of strategic level experience, the top senior level experience, and overall about 15 years of experience, you might be eligible to come on board. Or else, if you are a CA Sri Lanka member or ICSL member with 6 years of experience, particularly into management accounting, we can assess your application to get you on board to this. And that's how it would work. If you are to come on board to that route, you would directly get into the final case study of Cma, which is the strategic case study, completing which, with the experience coming into play, you can apply to become a CGMA. And few prominent names that you see on screen who are bankers in certain cases have completed the said area and have become Cma members. And beyond that, there are exam completes who have gone through the same, and you could see a few bankers here as well who had completed the same. All right. Now, beyond that, the second category, management case study. If you are a senior manager with over 10 years of experience, or if you're a head of finance, senior accountant, and then about senior manager with about 2 years of managerial level experience, you could come on board to this category. Okay, and there's another route called the corporate professional pathway, again at the same entry level, but this is basically for middle managers, meaning you need to now complete all the exams from management case study and forward. The one that you notice here would require you to complete the 2 case studies, the management case study and strategic case study. So we call that the CSF pathway. You don't have to worry too much about it. If you do notice onto the chat window right now, you would see there is a link that will be posted. If you want to know information about that, we will get in touch with you after this session, and we are happy to share this information. Right. So again, the entry point being at the management case study, allowing you to complete the balance of strategic level. Right. Finally, we have this program called Finance Leadership Program. There was a global launch for this on the 9th of September, just 2 days ago. And this is now offered everywhere in the world, an alternative self-study route to the Cma qualification that allows you to complete studies on your own through a learning management solution. And that offers extra 9 skill certificates as well that you see on the screen, starting from digital finance skill certificate to, as you see, I don't want to read through everything, but the option is available for you. Now here, it'll give you an opportunity of deciding how fast that you want to complete the program, or else how do you want to segregate your experience in learning the 3 levels that you see on the screen. Okay, and beyond that, the same Cma qualification, now it's developed and defined and tested in a different mean. So something interesting for many of us if you are to follow the program. Now, mostly this will give you an entry point to the operational case study and then management case study with strategic case study to complete. And the 3 subject areas that you see here, it doesn't mean that you get exempted from these areas, but you will cover the learning and assessment category through an online platform to complete everything. Now, I know this is not the platform to go through everything. I just want to give you a flavor as to what it is and what needs to be done. And you can take a quick snapshot of the screen that you see right now, or else enter the details on the link that is shared on the chat window so that Cma Sri Lanka team can get in touch with you. So thank you very much, and I'll pass it back to Asita to continue.
Thank you very much, Tarindu, for your presentation, as well as being one of our sponsors as our dedicated knowledge partner. So with that, I would like to get back to the session. So since we spoke about the lending criteria and the segmentation and also the role of the crib. So I would like to pose this question to Mr. Karunaratne. Right, if you look at Sri Lanka for a 21 million, let's say 22 million population, we have, if you take the numbers, we have 24 commercial banks and 6 specialized banks, 39 finance companies, and 3 specialized leasing companies. As typically you can call them lenders, and apart from that, you have 13 primary dealers who dedicated to government securities. But as per the National Financial Inclusion Survey, the access to credit is only to 45% of the population. So why this such a low percentage, Mr. Karunaratne? Mr. Karunaratne, if you could unmute yourself, that would be great.
Sorry. If you look at the financial services provided, there are many, informal financial service provided, like the formal financial service provided, which are regulated by the central banks, such as banks, finance companies, leasing establishment, and so on. So, so it's a mixture of formal, semi-formal, and informal. Now, look at banks, finance companies, leasing companies, basically formal sector. Then there are in-between institutions like cooperative societies, rural banks, other thrift societies, which are semi-formal providers. So in addition, especially if you look at the grassroots level finance sector like micro-lending, there are a number of informal lenders which cater to the needs of the grassroots level people. So I think probably so that is one reason which is not captured here. So, but if you look at the branch density of Sri Lanka, there are nearly 17 branches, bank branches density for about 100,000 adults, almost double the South Asian regional average of 9.4%. Okay, but the reason I mentioned, due to this informal sector, money lenders, the many grassroots level people prefer to transact with these informal money lenders. There are many reasons for that. Easy access to finance, less documentation, not requiring proof of income or security, flexibility of repayment, and so on. The other reason is now we are still behind the use of digital technology. Now, even if you look at many African countries, one of the key components of inclusion is this digital finance. Okay, such as mobile technology for disbursement of credit, but still I feel we are behind that. Okay, so there are many other factors that has led to both formal sector not lending adequately and informal sector lending adequately to these grassroots level people. So if you look at supply side factors, conventional banking practices with stringent requirements, so they are supposed to follow many standards. Of course, regulator itself imposed on. Okay, and lack of access to electronic payment structure, high cost factor, because the traditional model, which is the branch-based banking, will not serve the purpose. Then on the demand side constraint, financial illiteracy. Okay, so that is one of the reasons. Okay, then credit issues. I think Anthony mentioned about crib. But if you look at this particular sector, will not have any means of accessing the credit because of this inability to assess their credit worthiness. A lack of identity and no financial history, even though they have been, engaging, borrowing and making payments without any problem. There is no credit history recorded somewhere like credit. Okay, so which has led them difficult to look for finance from formal sector. Then lack of collaterals. Generally, formal banking and NBFI sector, lending is through the collateral. They prefer to secure themselves through a collateral. Okay, so that is another reason. And as I said earlier, also low knowledge on technical development. So of course, if you look at the recently launched Nfis strategy of Central Bank of Sri Lanka, that is National Financial Inclusion Strategy, this part has been addressed to a certain extent, because there are 4 pillars for this strategy, which is a national strategy, which will be implemented or maybe completed within next couple of years or next 3-year period. So one component is digital finance. Then another component is consumer protection, and the third component is financial literacy. So which basically try to address this problem, because one of the important element when especially in comes to micro lending.
Yeah, Mr. Karunatha, I would like to pick your statement from there and pose the question to Mr. Rohan Kumar. I hope you're okay with that, because you played set the platform for the next question. Yeah. So Mr. Rohan, so I think Mr. Karunatha was speaking about the lack of understanding or the knowledge. As a largest state sector lender, what sort of advice, I mean, how a retail client should prepare themselves before applying for a credit facility, and also how to determine the correct borrowing options, because since as Mr. Senatha mentioned, there are so many multiple borrowing options. So how would they determine that? What is the most suitable solution for them? So if you could limit it to 2 or 3 minutes, that would be great.
Yeah, well, Asita. So obviously, so when you are applying a credit facility, definitely you have to do some homework. So suppose you are participating for an interview, job interview, then of course you will prepare yourself, and sometimes you guess what would be the questions that could coming in. Likewise, so you have to prepare yourself before meeting the manager. So the thing is that you need to win the confidence, otherwise your proposal will not put forward for approval. So normally the banks, lending institutions that they are focusing on few main areas, especially about yourself. If it is a personal loan that you are going to apply against your salary, so still they don't worry about the purpose, but anyway, definitely they worry about your status, your health, your wealth, and your past records. As Mr. Anthony said, your clear records. So those will matter. So if you're in a business world, of course, what sort of industry that you are in, what is the position of your business, does your business is generating sufficient cash? So those are the things actually the banks are looking forward. So you must be able to prove your repayment capacity, the financial position at the interview. In addition to that, so they are concerned about the contribution. So if it is a personal loan, of course, so there is no such a need arise. But if it is a commercial loan, say for an example, if you want to purchase a land, then of course banks that they are not lending the 100% of the purchase price. So definitely you have to bring some contribution. Sometimes banks will go up to 75% of the purchase price. So the balance 25%, of course, you have to bring in. So you must be ready to answer how that you are going to meet that contribution. So in addition to that, if you're in a business, of course, so if you can prepare and if you can take with you audited accounts, if not draft account or at least management account. So if your business is a small one, of course, if you can take actually the bills or any proof document to establish your financial portion and repayment capacity, that will be definitely helpful. So depending on your credit requirement and also the tenor, actually they will worry about some collateral. If it is for a longer period, of course, they will definitely ask for some collateral, but depending on your case, actually, so still you can negotiate for better and easy terms, right? So my advice is actually, so if you can visit to few websites of banks, and so if you can check what are the terms and conditions that generally applies for these loans and what are the interest rate that they are offering. And so you know that there are calculators, inbuilt calculators, loan calculators, so you can just calculate what would be your monthly installment likewise. So if you prepare yourself, of course, you can negotiate for a better terms. So that is how you should prepare yourself prior to meet your manager for applying for a loan facility.
Right. Thank you, Rohana. With that, actually, I would like to pose this question to Mr. Senaratne. So how would you, so instead of, as we discussed, there are multiple purpose of, borrowing. But in your view, how a retail client could ride on the yield curve and borrow money for smart saving? Because generally, the general understanding is we should borrow only for our personal consumption, maybe to purchase a vehicle, or purchase a white goods or the brown goods, or maybe if at all a property. So especially in this low interest rate regime, what sort of strategies that the retail customers can employ to make use of this low interest regime?
Yeah, thanks, Aziz. Look, I think, as I said before, currently we are in one of the lowest interest rate regime, right? So clearly the borrowing has got much cheaper. I think what is more important is you should be very careful. What are you borrowing for? As I said, if you compare ourselves against some of the markets, we seems to be spending a lot of our borrowing is on consumption. So if it's not creating wealth for you and there's no future economic value, that would create unnecessary debt burden on you. I think that's what you need to be careful. So clearly, I think yes, if you're investing in, if you're borrowing to say on property in Sri Lanka, that's a safer bet. But if you're on the other hand, if you're borrowing on more to say even on the equity, you have to be a little careful. I mean, yes, if you're very sure on more stable blue chip, it makes sense. But if you're taking a bet on it or a gamble on the equity, then you need to be careful, because it's a basic principle of high risk, high return. So you need to be aware, and depending on where you are in your income on the affordability spectrum, because if you are really on like a very you're a net borrower, and if you're in kind of lower income segment, you need to be very careful, because you have other commitments that you need to make, and you have basic commitments you need to bring to the household, and on top of that you need to establish what is the cost of servicing debt against your monthly income, right? That's why I think, as Rohana said, I mean, there are lots of tools available, even digitally, calculators, etc. As a rule of thumb, you should try to keep your debt repayments at least less than about 30-40% of your, nothing more than that, because you need the balance to put lots of other commitments for your normal day-to-day expenses. So clearly, once you do that evaluation, based on your household income, your household expenses, what is that you could look to commit in terms of your servicing your debt, then you can go back and look at what options do you have and what are you investing for, would it give you a future return, and then you get additional income, so that will help you to increase your income, etc. So it's all boils down to you really knowing what are you investing, what are you borrowing for, and then in that purchasing decision, few other things that you need to be careful, right? How do you lock yourself in terms of your pricing? Because there are multiple products available in the market. You maybe lock yourself into a fixed term loan where your interest rates will be fixed. So like, interest rates are lower, it makes lots of sense for you to fix your commitment, so that your installment fixed. Even when the rates goes up, potentially it will, then you have already got advantage. So it's important to understand what are your terms of the loan. Is the floating? Is it a flexible and a floating interest rate that you're signing up for? Or is it a fixed income, right? So that's important. And also the tenor, how long you need to get, because what you need to realize is there will be more and more additional expenses that you may have to incur based on your family status and the family size as moves go on. So you got to really be more forward looking, and you need to be aware of what is your the test your affordability, and then as Anthony said, what is your financial fit score, right? I mean, what is it today? And as you go up, you need to have that visibility to see what are the commitments that can happen and what the debt burden is going to be, and how do you bring that in. It's very, very important. Because see, in Sri Lanka, if you look at it, because we see the debt report, sometimes people have borrowed about 10-20 times of your income. I mean, that's really, that will break you. And in some of the markets where it has happened, the regulator had to bring in controls to say, look, no industry cannot lend you beyond, say, 10 times or 15 times or 13 times of your income as unsecured. So this is what it is. So we are still at quite a lower stage in terms of like 11% of our personal credit is on percentage of GDP is where we are in terms of our household debt. But as we grow this, as we all recognize, it's important to both the consumer as well as to the economy. You need to make sure we grow safely, because if we don't do it well, it could just blow up, and we don't want to be there. But I totally appreciate the effort that comes in by both regulator as well as the bureau to bring this whole ecosystem that will help to support and induce a very healthy growth, and obviously giving more empowerment to both the consumer as well as the financial providers. And the digital will bring that. So the digital divide will bring in that both buyer and the supplier together, and make it more convenient. And the latest addition of doing eKYC, electronic KYC, will really help. Earlier, people had to go to a branch, but now more and more there will be banking and the financial institute giving you the opportunity to apply for your borrowing digitally while at home. So I think the future is bright. We have a good foundation, and I think if we work together, we should clearly look at how we could help our clients and consumers to help access to lending much more easier, so that they'll get into more the formal or the semi-formal sector, and at a more affordable price. And then that will help just both the public as well as the financial institute and the economy to prosper going forward. So with that, I'll pass it back to you, Asita.
Yeah, thank you, Mr. Sriratna. I think straight away we could go to the Q&A session as well. So I would like to pose this question to Mr. Anthony. So we got a question: after settling all dues, does script still hold our name and records, or is it taken off? So if you could take a minute or two, that would be great. You want me to repeat the question?
Yeah, no, I've got the question. Can you hear me, Asita?
Yes, you're audible.
Yeah. So once, I mean, actually, I saw the question because the question itself shows the wrong impression sometimes people have, because it says after I clear my name from CRIB, there is nothing to clear your name from CRIB, right? So basically, I think the question is, how long does your record stay on CRIB, right? So if you take a typical CRIB report, you have 2 years, the first 2 years of your data in detail, right? That is 24 months in detail, right? And then the next 3 years in summary form. So altogether 5 years of data. So if a data enters your credit report today, in 5 years' time, that data is not there, right? In 5 years' time, that data goes off totally. So if a data enters your credit report today, First, it will be in the detailed 2 years, 24 months. And then it will go to that summary 3 years. And in 5 years, in total, it's taken off. Right? That data goes off. And then new data will come in if there are in the new years, if you have borrowed something and you're paying back, all that data will come in basically. So, but if you have defaulted, if you have taken a loan and not paid, that record will be there until you make the payment. So that's, I think that particular question answered in total. What I want to also emphasize here is that, remember, historically, if you take the default rates of our country, right, this has been around 5% overall. Like, I mean, before this Easter attacks and COVID and all these things may have sort of, moved it a bit more. It was around 5%, the default rates overall. So which means 95% of the people who have borrowed have consumed that debt and paid back well. So you have to understand that, right? So that means that, it is that 5% that we have to worry about. And even in that 5%, there can be that lot which are habitual defaulters, right? So that's the lot we need to worry about. But the crib today is entirely a facilitator of credit. And that's what we have to understand. We also spoke about, I would like to touch on a security aspect that was spoken about. One of the biggest securities that a person can have is your reputation, right? Reputation as a collateral is your score, crib score, credit score. Right, the credit score gives you your reputation in a score. You can take that as your security. In most developed nations, I mean, you don't have to go for traditional security of land, buildings. Not everybody has that. You don't have to have that, right? Yeah. You can take your score and tell them, look, I have a score of 700. Normally, a score, the crib score is like between 250 to 900. If you have a score of about 700, 750, you can go and say, look, don't lend to me at 12%. Lend, I'm just taking an example, right? Lend to me at like 10% because I have a 600 score or a 700 score or whatever. You can actually bargain for better terms and conditions using the score, right? And even for people who don't have sort of, who are not borrowed, we can enable scores even for them. You can do a psychometric score, right? You can take people's mobile data, mobile footprint, scrape the mobile footprint of people and augment that to a score and give you a score, right? And you can do lots of things to enable people to borrow. Even today, crib runs something called the Secure Transaction Registry, which is a digital registry, which you can keep your machinery, your movables, everything on that registry, and you can borrow. So this is a super thing for SMEs, right? And this is a very important sector. You spoke about the microfinance, right? Microfinance doesn't have crib access, which is the good point Mr. Karunaratna spoke about. I believe the central bank is working on something called the Credit Regulatory Authority Act, which can come in the future. I mean, I believe it's been worked on at the moment. It's on the cards. If that comes through, even microfinance companies will have crib access. This will, I mean, this is the informal sector. This will stop people from being, indebted. The wrong people being given the wrong amounts of credit will indebt them. Put them into trouble. This is what can happen in the informal sector, and the very high
Mr.
interest.
Anthony, just sorry to interrupt. Just to add on to that, I think if I'm not mistaken, I think CRIB is working on another project where even the soft data, such as as you said, the consumption of mobile also can be taken in for the computation of the crib calculation during next couple of months or so. So I think that's also one. Yeah. So thank you very much for that. So I think I would like to take one final question. So I think I would pose this question to Mr. Rohana. With the business failing and closing down, how feasible is it for the financial sector to take a 1-year loss in order for business to recover? Simply as banks keeps continuing to make record profits. So if you could keep it for 1 to 2 minutes, that would be great. That's one final question.
So the thing is, Asita, you know that so if you borrowed excessively, then there will be a problem in a situation like this. So there is a term called debt equity. So if your business that you have borrowed the total cost of the project or the business 100% financed by the bank or the lending institution, then there will be a problem. So if you can balance, so if you can actually put half of the equity, then so you are having a good margin. So you know that during this pandemic situation, close down of businesses, of course. So exactly, so you have to meet the day-to-day expenses. The same time, you have to pay the loans as well. But keep in mind, Asita, that most of the borrowers that they are paying, the thing is that actually that I think that so they have actually well managed their borrowing. They have not excessively borrowed. For the businesses and people that they have excessively borrowed, of course, they are actually businesses are hit very badly. So they cannot absorb any shocks. So your business should be in a position to absorb this type of quick shock in a situation like this. So you need to balance the debt equity.
Right. Thank you very much, Mr. Rohana. So I think with that, we have come to an end. So I would like to invite, sorry, before that, just a very, very quick brief wrap up. So as we discussed repeatedly, so credit is a good tool, which is essential part of the personal finance, but that's something also which should be managed prudently, as our speakers explicitly mentioned. So we need to make sure that we do not borrow beyond our means. Keeping be responsible in terms of borrowing, and financial institutions also have a responsibility to lend responsibly as well. And also the crib is something that we spoke about. So it's not something that that the citizen should be scared of. That's a tool that has been enabled by the regulator, or rather financial regulator, to assess the credit score or to check your credit worthiness. So it's not an institution that which gives a credit decision whether whether the institution can lend you or not. Merely it's an entity which disseminate information. So with that, I think yeah, so that's basically the essence of this discussion. So with that, I think I would like to invite Medadi Alvis to propose a vote of official vote of thanks. So before that, I think I would like to thank all the speakers who spent their Saturday, especially for this event. I'll leave the official vote of thanks to Meda. So Meda, over to you.
Thank you, Lion Asita. On behalf of the Lions Club of Colombo host, I would like to thank all our esteemed panelists this evening. Mr. Rohana Kumara, Mr. Nandi Anthony, Mr. J.P.R. Karunaratna, and Mr. Nadisha Senaratna. Thank you very much for enlightening us on matters relating to personal credit and accepting our kind invitation to very generously come on board and to bring about financial literacy in our country. You have made the session colorful and enlightening. Thank you, Lion Asita Pinnadua, our club president, who not only moderated this session, but the brainchild of the same. Lion Asita, you're the powerhouse behind this project, and we appreciate your contribution and your thoughts very much. I would like to express our gratitude to our partners this evening: PR Wire, CIMA, STD Bank, AIA Insurance, and SLT Mobitel. I'll be failing in my duty if I do not offer a huge thank you to all the committee members of the Financial Literacy Committee of our Lions Club for working tirelessly for week after week to make this session and the project a success, as well as to all our Lions Club members who are helping out in numerous ways. Mr. Tusit Amarasinghe of OS2 Works, thank you very much for handling the logistics. All the participants today on Zoom and Facebook Live are appreciated for being a part of this program. I'm sure that now, after this program of personal credit, you're better enlightened and better equipped to handle your personal finances in the future. Thank you. Thank you very much.
We are always preparing to protect our loved ones. Not always for what will happen, but for what could happen. With a life insurance cover that grows every year, you ensure that whatever comes your way, your loved ones are always protected. Introducing AIA Super Protector, the life insurance that helps you prepare to put your loved ones first. AIA Insurance.
Morning, Masa.
Morning, Sana. කොහොමද තත්ත්වය?
UPay app එක නිසා වැඩේ නිකන් ක්‍රීම් බනිස් වගේ නැගලා යනවා. ගිලන.
Right. Morning.
ආයිබෝන් සර්.
අයිබෝන්. බොමුත් තැමිලි ගෙඩිය.
බොමු.
හැම වෙලාවෙම මාරු සල්ලි අත ගන්න ඕනේ නෑ මාම. ස්මාර්ට් ෆෝන් එකකට අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි, අපිත් ආරක්ෂිතයි.
ආර්සියත් අය. අයියෝ මිස් මාරුසල්ලි නැද්ද?
ෆෝන් එකේ apps එකක් තිබුණත් වැඩක් නෑ. ලංකා QR එක සපෝට් කරන අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි, අපිත් ආරක්ෂිතයි.
මැසේජ් එක.
හරි මත් සල්ලි ආව.
ආර්සියත් අය. අයියෝ මිස් මාරුසල්ලි නැද්ද?
ෆෝන් එකේ apps එකක් තිබුණත් වැඩක් නෑ. ලංකා QR එක සපෝට් කරන අන්න අර වගේ ලංකා QR සපෝට් කරන UPay app එක දාගෙන ඒකෙන් ගනුදෙනු කරන්න.
ඕක පුරුද්දකට තියාගත්තාම වැඩෙත් ලේසි, අපිත් ආරක්ෂිතයි.
Morning. සල්ලි ආවනේ?
හරි මිස්. සල්ලි ආව මිස්.
අන්න කෙල්ල.
Bye.
අන්න කෙල්ල.
Sana.
Google Play Store හෝ Apple App Store හරහා UPay app එක නොමිලේ ඩවුන්ලෝඩ් කරගන්න.
Cma qualification and CGMA designation has provided me with the edge to be successful in securing the current position with my employer.
The Cma C-Suite program helped me bridge the gap between my existing knowledge with the latest trends in business and finance.
The CGMA designation had opened career doors for me. I got an opportunity thanks to the skills I learned from C-Suite program.
Through the Cma C-Suite program, I learned how to be more strategic in my thinking at work. This has given me more confidence when making high-level decisions.
The Cma C-Suite program shaped my critical thinking skills.
What makes a nation great? Is it the richness of its heritage, the beauty of its natural bounty, the state of its state-of-the-art, or is it the bonds that bind us? For decades, SLT Mobitel has been linking Sri Lankan lives and uniting the nation. Whatever the future may look like, we'll always be right here connecting you to the things you care most about. SLT Mobitel, the connection.
ඔබ තුල සිටිනා මා තුල සිටිනා රට රකින්න විරුවා සටන් දෙමට වඩනා දැන් ඒ මොහොත තමා දැන් ඒ මොහොත තමා දෙමාපියන් අප දූ දරුවන් අප සතු ඉහළම දනයවුන් අපි රැකුණොත් මුළු රටම රැකේ මේ වීරත්වය පානා මොහොතයි நீயும் நானும் வீரனே இது நாட்டை மீட்கும் வேளையே சகலரையும் காத்திடலாம் நம்மை நாம் காத்தால் இதுவே அத்தருணம்
අපි රැකුණොත් රටත් රැකේ අපි රට වෙනුවෙන් අපේ කොටස හරියටම ඉටු කරමු AIA ඉන්ෂුරන්ස්